Well, of course it is concerning to see that the tensions grow, if I may put it like that. I think we shouldn't forget that growth rates, generally spoken, are quite good. We have a pretty high growth rate in average on the globe. We see Asia growing more than average, even Europe and the US. So the fundamentals of business is actually pretty good. And the tensions in trade war is giving concern. Right now they don't have significant impact. They've been very targeted at certain categories. But of course, if this continues, it will have, in my opinion, a negative impact on growth, and with that could have ripple effects on the economy, in particular in developing countries.
Does that mean if the U.S. administration moves forward on the next tranche that they have threatened, let's say goods worth $200 billion that might have tariffs slapped on them, would you worry at that point?
I'm not sure it's that step. But it is clear, and the experience we've seen from the financial crisis 10 years ago is that the global economy is very connected. And so you cannot keep this as a bilateral conversation between two countries. It has effects on the entire value chain, and with that it will have effects everywhere. So right now I believe it's a sign of wanting to make sure we have a level playing field in all countries. I hope it will stay at a level of warning and not escalate, because nobody wins from a global trade war.
Does that suggest that you haven't yet seen any real impact in your businesses, either at Siemens or at A.P. Moller-Maersk, when it comes to either the shipping demand or even orders, I think, of new businesses looking to invest when it comes to Siemens' business lines? Is it fair to say you haven't yet seen an impact?
Yes, that is correct. We have not seen the impact yet. Siemens just delivered another record quarter where orders are growing even more rapidly than in the past. And at A.P. Moller-Maersk we are transporting global trade, and we are seeing good numbers. So the impact is not there yet, and we are of course looking at this very in details, but so far without any significant impact.
When you talk about the strong growth story you still witness across the region in Asia, I mean, many are, as you point out, looking at the previous financial crisis, wondering what risks are out there currently. A guest we had on previously was talking about this issue of leverage, perhaps too much indebtedness out there. And if you think of the debt that China fueled and the growth that fueled really in the region, is that something that concerns you? Perhaps that we could be set for a sudden slowdown at some stage?
I don't see the same effect as we had 10 years ago right now. I would say the growth rates we see now are driven by fundamentals. And in some case you could argue that the financial crisis was kind of the end of a previous era. Right now, growth is driven by digitization, the fact that value chains can be significantly more efficient, more customer-oriented, more rapid. Innovation is taking place, and through innovation, we see the opportunity to grow. So companies that invest in R&D right now, at Siemens, we've increased our R&D spend by 20%, more than 5 billion euros a year, and that is what is fueling real growth, not a bubble-type growth.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.